Hello, Mark Lowdy here. For Singapore Investment Week, we're not just looking at the stock market, also the property market. And investors in Singapore would be very well aware of the many property developers who try to sell properties to Singaporeans who already are very much in favour of this particular asset class. It seems every other week there is yet another display by an Australian developer, for example, looking to sell products, sell condos in Sydney and Melbourne, through to land banking companies that are hoping to put your money away for several years in order to then generate a return once the land is sold and developed. Well, here's another one for you. This one, though, focusing on the German market, and with the very Singaporean Vignesh Pillai is here with me. He's Managing Director of Dolphin Capital Asia.
Yep.
Thanks so much for coming in. I guess one thing, let's take the overview first for investors who are hearing about Australia, then there's the whole UK property market, then we hear about land banking in Canada and on all sorts of things. What is the number one thing that investors in Singapore really need to look out for when they're looking to invest in property outside their HDB flat or private condo here?
To me personally, I think that they should not view property as just purely capital appreciation, what is exciting and what is not. I think that they got to analyze it just to actually kind of notice like where exactly this property is done. Is it a stable economic climate and stuff like that? Like, for example, predominantly Singaporeans actually invest into UK and Australia, but the UK property market right now, though there are opportunities in distressed properties, it is something which always fluctuates. There's always a big risk for Singaporean investors or any investors, by large. But for example, in German property market itself, if you look at it, Singaporean investors predominantly have not actually looked into Germany. It could be the language barrier or something, but it's something which has not been looked upon at all. But if you look at the CBRE Richard's Ellis report very recently on the German residential property market, the German property market has actually gone up 16% last year, and it's actually predicted to go up even more now. But the surprising factor about this is not because it's going up, but if you look at 2008, the German property market, even though there was a financial crisis, it actually went up as well. It's actually a very sideways trending market. It's a very stable market. And the Germans themselves are not like speculative investors like the Singaporeans to actually push the property prices up.
Right.
So it's a good market to actually look at different kind of investments, you know.
Yeah. But still, when you leaf through the Saturday paper and you see all various property seminars, what is perhaps the unique selling proposition of the German market, or what is it where you see a common thread among all of them which the German market isn't subject to?
Yeah, I think a lot of things has to be actually dealt with exit strategy itself. I see investment seminars or actually products itself in the market where there isn't a defined exit strategy, where it's not too different. It's not like something which is out of the ordinary in the market. But I think Germany itself, like I said, it's actually a very sideways trending market. So investors don't look at making too much of a profit or return over capital appreciation. But some of the different developers in Germany, for example, Dolphin Capital deals specifically with listed building developments itself. And listed building developments are like heritage buildings, like what we call it in Singapore. And the thing is that if you invest in listed buildings, like I said, at the back end, it's not like something which is very attractive because it's not too much of capital appreciation, but it is the idea of actually getting involved with the development and the refurbishment of these projects itself, which is very profitable for any investor. Yeah.
In Australia, I guess a lot of people might buy a condo in Melbourne if their children then go and live in that condo while they're studying at an Australian university. I guess not too many people move to Germany to study. What cultural barrier breakers do you have to help people understand how the German market works?
I think it's a huge difficulty actually educating the Singaporean market with regards to German property itself because, like I said, of the language barriers and stuff like that. But I think it is actually so as to educate the market that it's not purely a property investment itself. It is actually like an investment on a property where you look at the defined exit strategy, where you look at the returns an investor would make itself on the property. Because Germany, like I said, you cannot treat it like a very typical property market unless if you're looking at specific locations in the German states itself, like in Berlin or in Munich and stuff like that. And it takes a lot of education and to be an expert in the industry itself to actually know where exactly is a good location to actually invest in. And I think that's where you got to actually look out for a trusted developer with a good track record or something like that, where actually they can actually trust and look at the developments they are doing.
In recent memory, there have been various cases in Singapore where this land banking schemes
Yeah.
have not been as successful as perhaps the investors believed. Perhaps it took longer for a property to appreciate or for the property to be sold. There was also concern that money had been invested, but the property had not been purchased.
Yeah.
These sort of things. How real are those concerns in Germany, that if you put your money there, then and you can't even go there and fight for the money back because you don't speak the language?
Yeah, exactly. I think it's absolutely right in terms of bringing up the whole land banking scheme concept and all, which has come into the market. What we do here is not land banking, we do developments actually in Germany itself. Land banking is something where you kind of put your funds into something in terms of hope that the land would actually get some kind of a planning permission, or get some kind of like reason to actually sell the land off and the investor to make a profit. Whereas developments are a little bit different, because we would know what is the price we're buying it at and the price we're selling it at and when exactly it'll be sold off. And of course, in terms of like proving that the property has been purchased and stuff like that, every project is audited, and stuff like this is easy for an investor to actually track, So they can actually see sales and purchase agreements, land registries, because I think security is the most important thing. Can't be just paper investment, has to be something which is properly actually done into the building itself, and they actually purchase the building. Yeah.
You're Singaporean.
Yeah.
You're an investment banker by trade, I understand.
Yeah,
How did you get into this?
I reckon it's because I've always been someone who has been wanting to actually look at different kind of investments, start something which is niche in the market. Germany was something which was never touched on in the Singaporean market, and I didn't want to do another UK or Australian kind of a development and just do it with the rest of the other developers in the market. So we wanted to do something which was niche, which was interesting, exciting, different, short-term, so that it's a very liquid kind of investment. So I kind of came across this because it's a pension-approved investment actually out of the UK about 3.5 years ago. This is an investment concept which has been running in the UK for like about 5 years now. And it's been very successful. It's approved by pension trustees, where the British can actually invest their pension money into this. And I was like wondering, why isn't this being done in Singapore or Asia? And that's how it all started about 1.5, 2 years back now, where we actually established Dolphin Capital Asia in Singapore to actually expand throughout the rest of Asia itself. So right now, we've just started up offices in Indonesia, Malaysia, and Japan. We're starting it up right now. So it's been quite a success, and I would say that though it was a challenge to educate the Singaporean market, I think people have received it well. And with our track record standing at like over 20 projects exited so far, I think it has proved to be quite a success. Yeah.
But you're an investment banker. You care about assets under management. Where were you, by the way, when you?
I was in fixed income. I was actually dealing with bonds, and I was in Barclays Capital.
Right.
And the thing is, like as I mentioned, you see bonds. It is also looking at underlying assets. This is not an investment which is no underlying assets. Investors get a first charge on the building, which is officially registered in the land registry in Germany. Everything is actually done in a very, very proper way, where the asset, the investment is backed by an asset. So investors have like a huge kind of a security on their investments itself, plus the financial assurance Dolphin Capital actually provides. Yeah.
Thank you very much, Vignesh Pillai, the Managing Director of Dolphin Capital Asia. Here is the website that you should be looking at for more seminars and information on Singapore Investment Week, which is on from the 25th to the 31st of August.